So I'm going to make a contrarian observation, because if we're a 4-year cycle, 2026 should be terrible for crypto. That would be the 4-year cycle.
No.
But our belief is that crypto is going to do really well next year, because it's not about gold and digital gold and like Bitcoin being the flagship and the alts follow that cycle. It's really about tokenization, and that tokenization wave, and that's going to cause people to own and build and get excited about new products. That's going to be very important to price next year. So I think next year is a banner year for actual crypto building and therefore crypto prices.
Bitcoin is exhibiting powerful momentum, trading near $92,000, fueled by steady institutional demand. Spot ETFs now hold over 1.2 million Bitcoin. On-chain data confirms whale confidence, with addresses holding 1,000 plus Bitcoin, accumulating 15,000 coins this week, despite rising U.S. Treasury yields. Short-term resistance is set at the psychological $100,000 level, reinforced by $500 million in futures open interest. A breakout is projected to target $110,000 by year-end, driven by institutional FOMO. Support holds firm at $92,000. Challenging the cycle, this fundamental strength leads strategist Tom Lee to challenge the established 4-year Bitcoin cycle, which traditionally forecasts a downturn in 2026. He predicts a banner 2026, asserting that crypto will decouple from its historical pattern because the current market stability is merely the precursor to a far greater wave. Lee identifies the key catalyst as the impending wave of asset tokenization. He argues this foundational shift is reinforcing Bitcoin's role as digital gold, paving the way for other digital assets. This wave will spur real-world building and product innovation, attracting both developers and owners. Lee stresses that this organic, utility-driven innovation, rather than cycle mechanics, will be the primary force driving prices exponentially higher next year, making 2026 a standout period. But the big question now is, what specific regulatory or infrastructural milestone do you believe is most critical for truly unleashing this projected banner year in 2026? Let's take you back to Tom Lee's interview for more insight. Please don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for tuning in. Enjoy the rest of the video.
I think the two most important, at least for someone young, is number one, they need to not do what the crowd is doing. You need to be independent. And that doesn't mean like whatever the crowd likes is wrong, but you're going to find bigger opportunities by not doing what everybody else is doing. So for instance, crypto in the early days was a non-consensus thing to do, and that's how people made money. Or for instance, a stock like Palantir in the early days, it was non-consensus to like it. Alex Karp was quite controversial, or Elon Musk in his early days. But if you were non-consensus and really did your homework, you would have identified them as N equals 1 people. But N equals meant like,
of course.
And the second really important lesson to me is that you have to understand the difference between conviction and being stubborn. Because you need conviction to invest, so you can ride out the volatility.
Yeah.
But you don't want to be stubborn, because when you're wrong, you have to acknowledge that you're wrong. So there's a difference between the two.
Has crypto become a little consensus? Or is it still non-consensus to you?
That's actually an important existential question.
Right?
Because like this year, there are people who are starting to abandon crypto thinking it's not exciting anymore.
Right.
Or AI is a bigger story, or something else. But I'm seeing it at the conferences, and I realized it even now. What's probably happening in crypto is that there are these OGs, like the original people in crypto, and they were in their 20s, okay? But now they're 35. So the OGs are not young anymore. And so for them, crypto feels different because they're maturing and the industry is more mature. But if they take a step back, crypto is still in its infancy. I mean, it is a baby today because the best years are ahead. I talked about this yesterday. Like today, There's only 4 million Bitcoin wallets with $10,000 in it.
Interesting.
There's almost 900 million pension or brokerage accounts in the world that have over $10,000. That's 200 times the size, meaning more people have money in stocks or pensions than they own in Bitcoin. So it's still the earliest days. So there's a new wave of people that's going to find crypto, but the OGs think this is boring.
Yeah.
So it's not, so they have to just realize they're aging, and now they have, and the industry still has all these new people to come in. That's what I think, how when you hear people talk about crypto being boring, it's because they've been doing it a long time.
Stubbornness. Do you think you're stubborn when it comes to Ethereum? Or do you think you have more of a hard conviction?
Well, you won't know until time has passed, right? Because
yeah, it's true.
Like for instance, looking back, in 2018, as crypto was crumbling, we didn't want to be like throwing in the towel on Bitcoin, but people thought we were being stubborn. But crypto came back huge. So in retrospect, that was probably more conviction than being stubborn. But really, no one will know at the time. I think one of the things that Fundstrat and the company I built, Fundstrat, which is now celebrating its 11th year of business, is that we do a lot of what we call evidence-based research. So we do our research, and it doesn't give us a crystal ball into the future, but it gives us the probabilistic outcome. And so like our belief on Ethereum isn't like we're not being stubborn about it, but it's still the most probable outcome is that that's going to be the winning chain in the future. So the future of finance.
For you, like why Ethereum? Like what was the aha moment there?
Yeah, so we've been writing and recommending both Bitcoin and Ethereum for the last 9 years, but we were leaning towards people allocating more heavily to Bitcoin because we just thought that digital gold was an easier narrative to explain to our clients. But now in 2025, I think digital gold and Bitcoin as store of values is well accepted. So there's less, in my mind, discovery of that argument.
Right.
I mean, it's still there's still a lot of virtues to Bitcoin. But when I look at the next 10 years, 15 years, we're a lot more excited about Ethereum than Bitcoin's future. I think Ethereum can still, and Bitcoin could have big moves between now and year end. So, but the reason to be excited about Ethereum is Wall Street is choosing to use the blockchain for the future. That's the big change.
Exactly.
It started with stable coins, and it was a big aha moment for Wall Street. But that's just tokenizing $1. And now Wall Street wants to tokenize everything.
Oh, yeah.
And they're not going to build it on Bitcoin.
No.
They need a smart contract platform.
Like, do you think that them coming in and building L1s instead of L2s on Ethereum is actually bearish ETH?
People, at the end of the day, probably not. Okay. The reason being, if we tokenize the world, so gold is a $20 trillion market. Okay. And that's Bitcoin is replacing gold.
Yes.
But when you add in stocks and bonds and real estate and, intellectual property and art, you're not in the trillions, you're in the quadrillion. Right? So like the addressable market, let's say, is 100 or 200 times bigger. You can't fit that onto one blockchain. So in other words, like you in the practical reality is like Ethereum can't be the blockchain of the entire tokenized world because it would, like if you think about the computational requirements or whatever, everything would be running on one L1. So it makes sense that people are going to try to create chains that maybe bridge and talk to each other.
Also to make money.
Yeah. But I don't think of a world where the major L1 isn't still going to be the most valuable. Like in what they call, when you look at what they call market structure, the top 2 or 3 capture the majority of the economics. And I think that's what Ethereum is going to be.
Building on the market stability, and the 2026 decoupling thesis. Tom Lee grounds his conviction in two core investing lessons: the necessity of being non-consensus and understanding the distinction between conviction and stubbornness. Lee challenges the idea that crypto is now a consensus trade or that the best days are behind it. He argues the industry is in its infancy, noting a vast growth runway. Only 4 million Bitcoin wallets hold over $10,000 versus nearly 900 million traditional brokerage accounts, indicating a potential 200 times increase in adoption. Fundstrat's high conviction in Ethereum, in particular, is based on evidence-based research, projecting it as the chain with the most probable outcome of dominating the future of finance. This belief stems from institutional activity. While Bitcoin's digital gold status is now accepted, the focus shifts because Wall Street is actively choosing the Ethereum blockchain to tokenize everything. Lee sees this tokenization wave as opening a quadrillion-dollar addressable market, 100 to 200 times larger than current estimates, which will not fit on a single chain. However, institutional players prioritize reliability and zero downtime, ensuring the dominant L1s, like Ethereum, will capture the majority of the economic value. Let's watch more clips from his interview.
Well, I think people, and this happens in the stock world, everybody wants instant gratification. They want,
Of course.
to hit the buy button and the next day they make money.
Of course. If not, it's a scam.
Yeah. and everyone thinks that over the next 5 years, they'll push the buy button 1,000 times and get 1,000 buy buttons right.
I wish I did that.
Now, and as you know, like the odds of anyone trading successfully 1,000 trades, and coming out ahead is, statistically like 5%. Actually, they did a study on Hong Kong traders. It's like 5% make money day trading. Everyone else loses money. Jeez. You're better off investing. Yeah, most people can't day trade because there's too much emotion involved.
I can't at all.
Yeah. So if I had to say what are people getting wrong with Ethereum, tokenization is this super cycle, this 5-10 year story, which means over the next 10 years from now, Ethereum is a completely different chain than it is today, monster sized. So today's price is discounting the next 10 years, right? Like imagine you're like looking with a telescope 10 years from now. So you're looking at something 1,000 miles away and you get there.
Yeah.
That's Ethereum's future. So the discount to the future is like, it's 1,000 miles away and you just took 5 steps.
Yeah.
It's still in the future. Ethereum's price is not about what's happening today. It's about the future. And so they shouldn't expect the price to go up every day, but they should invest in that super cycle. And I think that what people get wrong is if you're discounting the future, Ethereum at 5,000 and Ethereum at 3,000, it's still got $100,000 price in the future. And that difference in the price today is just a small variation in the discount rate. That's what people get wrong, is that they have to sit through the volatility.
Well, you're one of the most famous perma bulls in the world, I believe. Or do you think you're a perma bull?
Well, it depends on like what that definition is now. Because like,
I guess you tend to be way more bullish than you're bearish, and you're almost never bearish.
Yeah. Or let me put it this way. If I look at either my personal wealth accumulation or my career arc or my clients, in my 11 years, I've made some people phenomenally wealthy, like private jet wealthy, our clients. None of them made money day trading. Like I've never made any, and I've never met a rich client, a friend of mine who's made money as a bear. Zero. I mean, imagine this, like someone says, how did you make your money? Guys, like I built this real estate empire, or I built, the best chain, best department store chain. You never met somebody saying like, I made money by putting people out of business or something. Like
exactly.
No one's ever.
I know what you mean.
So, and like, when I look at like my best personal investments, whether it's Bitcoin or the Mag 7, because, I own I have a lot of stocks that have been, 50x. They've never not had 50, 60, 70% drawdowns. And the thing that people do is they sell it when it's down, and I've just held them. I mean, Amazon was $25. Where is it? So this is pre-split. So where is
multiple splits, right?
I think Amazon must be. So these are public companies with venture-like returns, but you had to sit through the drawdowns. They should just have 2 ways to price Ethereum in their head. Okay. One is, what is its price ratio to Bitcoin? That should make sense because they're like, if you think Ethereum's story is getting better than Bitcoin, like there's more excitement or things happening, then its price ratio relative to Bitcoin should go up. I mean, it's sort of like, it would be like a relative price comparison. And that price ratio in the past was like 0.08. That's the average price of Ethereum to Bitcoin. Well, if someone thinks Bitcoin gets to 200,000, which I think it will, then Ethereum, just to get to its long-term average, is like 16,000.
Yeah.
Okay, and it's like 3,000 right now. Now, if Ethereum gets to the same value as Bitcoin, the network value, that's like 250,000, which could Ethereum be more valuable than Bitcoin in the future? Keep in mind, OpenAI is probably, if it was a publicly traded company, would be worth $1 trillion. And it's one of 4 or 5 LLMs. OpenAI just by itself is worth 3 times Ethereum right now. Is Ethereum more valuable in relative to AI? Right. OpenAI is just one of like 8 models. And if Ethereum is the dominant L1, shouldn't that be worth
more than
a couple trillion?
Couple trillion, yeah. No.
So that's why when I say 3,000 ETH, you're getting so much future optionality. So I would make a contrarian observation, because if we're a 4-year cycle, 2026 should be terrible for crypto, right? That would be the 4-year cycle.
Yeah.
But our belief is that crypto is going to do really well next year, because it's not about gold and digital gold and like Bitcoin being the flagship and the alts follow that cycle. It's really about tokenization. And that tokenization wave, and that's going to cause people to own and build and get excited about new products. That's going to be very important to price next year. So I think next year is a banner year for actual crypto building and therefore crypto prices. First of all, prediction markets are going to be evolving, and they're central players in financial market discovery. So they're really important. And they all came out of crypto, really. Right? Meaning, like, it's another example, just like Tether, that when crypto businesses break out, they're far, far better business models. But prediction markets are going to play a really important role in financial markets, because it really captures a very singular and clear message about what an expectation is. Like, in other words, when I looked at the 2024 elections, I think I told you about this.
Yeah.
We used the prediction markets and realized that all the national polling and all those econometric models that said the Democratic candidate was going to win were so different than what the betting markets were showing. And people were trying to explain away that the betting markets were wrong. Betting markets got it. Prediction markets got it dead right. 50 out of 50 states were correctly called in Polymarket. So I do think it's the closest thing to seeing tomorrow's newspaper. And in the future, as we tokenize financial instruments, if you can harmonize that with prediction markets.
Tom Lee points out that people crave instant gains, hitting buy and expecting quick profits, but day trading rarely works. A Hong Kong study showed that only 5% of traders profit long-term. Emotions derail most. You're far better off investing patiently. Tokenization marks a supercycle for Ethereum, a 5 to 10-year transformation into a massive chain. Today's price discounts that distant future, like peering through a telescope at something 1,000 miles away after taking just 5 steps. At $3,000 or $5,000, it's still a bargain versus a potential $100,000, with volatility just reflecting minor discount rate shifts. Investors must endure the swings. Lee describes himself as more perma-bull than perma-bear, rarely bearish. In 11 years at Fundstrat, he's built client wealth, private jet levels, through holdings like Bitcoin and Mag 7 stocks, never day trading. His best picks, including Amazon at $25 pre-split, endured 50 to 70% drawdowns, yet held unlocked venture-like returns. Price Ethereum 2 ways, he suggests. its ratio to Bitcoin, historically averaging 0.08. If Bitcoin hits $200,000, Ethereum reverts to $16,000 from $3,000 now. Ethereum equaling Bitcoin means $250,000. Tom Lee notes OpenAI alone, if public, tops $1 trillion as one of several LLMs, yet Ethereum, as a dominant L1, deserves a couple of trillion status, packing future optionality at current levels. Prediction markets, born from crypto like Tether, will revolutionize finance, Lee says. What do you think will drive Bitcoin's price more in 2026? Sticking to the traditional 4-year cycle, or the tokenization wave sparking real crypto building? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to like and subscribe.